Let's go to the edge of the trading floor in Chicago. There at the CME Group. Scott Gecas with Walls Trading is here. Scott, I want to come back to these numbers here, these export inspection numbers here in just a moment and talk to you about that. But first of all, tell us, what is the mood like there today now that we've got all of this major news behind us? What's everybody thinking and saying?
Yeah, right now, just as well as going into all of last week on Friday, everything is going to be due to headline risk, the Trump effect again. So everybody's still trading on the headlines. Everyone's waiting to see what could come up next. You know, as far as all the grain markets go from some of the traders as well as the farmers, they're pretty much at a standstill. We're looking for sideways movement. What else can this market throw at us bearish? So that's the reason why you're seeing a little bit of a bullish catalyst in corn as well as in the wheat market. Soybeans bounced off of that low. They were down pretty big this morning, but those are some of the reasons why you're starting to see some short covering here a little bit now. Okay, so we've got this wide trading range. You mentioned the bounce. Let's go over here and run across these numbers right quick, because I want to ask you here in just a moment about this trading range and what that can mean for us. The corn market right now off of the low, down a penny in July at 3.50 3/4. The December's down 3/4 cent. Soybeans, you mentioned, still double-digit losses here. July down 11 1/4, November down 10 1/4 at 8.23. That's the new crop. But July Chicago wheat still gaining strength here, Scott, up 7 1/4 cents at 4.32. Got as high as 4.34. So we got a trading range in this the Chicago wheat, 4.34 all the way down to 4.18 1/2. What a wild swing. Oh, yeah, and that's the option volatility is absolutely through the roof across the board. For corn, soybeans, as well as wheat, you're seeing $1 to the upside calls. That skew, meaning you're going to pay $1 more for upside calls rather than downside puts. So that just confirms that we're expecting at least sideways movement or to a little bit more upside. But we have to wait and see. Again, what else can this market throw at us as far as bearish headlines go? We have to wait and see.
Well, when it comes to wheat, you know, we've got that weekly crop ratings report. And when I was home in Southwest Kansas over the weekend, I got the chance to get above some of that wheat, and it certainly looks pretty good. So do you think that the weather may take a little bit of a front seat here maybe tomorrow?
In theory, yes, of course. I think the weather being extremely wet, you know, I was on last week talking about this week is going to be important for planting. If we can't get 50% in, you're going to start seeing yields drop. And if we have yields drop subpar 70, you're going to see a big reaction in some of these markets.
All right, Scott. We're going to take a break, and when we come back, we've got more of the market day report coming up in just a moment. Stay right where you are. Now back to Scott Gecas in Chicago, there at the edge of the trading floor with Walls Trading. Okay, the numbers are out here for today for this futures market. A lot of weakness to go all the way around here in the protein complex. Let's start with the cattle. Seasonally, we see a little bit of a pullback this time around. So far, though, we seem to be going down and holding around that 107 on those deferred contracts in the live cattle pretty well.
Yeah, and that was when we were looking at the June futures. We broke that 110 level. That 110 was definitely a psychological level as well as a very, very big technical level. So it pierced that 110, popped right back up. And what I want to focus on with the cattle market is you've seen on Friday, we had a lot of short covering. We had a very bullish day, and then we gave that all back and then more some today. So the cattle market, they just can't catch a break right now. With the market being as well as down as much as it has, I mean, it's putting a little bit of pressure on the cattle market, and that seasonal demand that we were just talking about has yet to show up. As soon as that shows up, we expect the cattle to bounce a little bit here.
Well, there's still some longs in this market, but were you encouraged by the fact that we were able to take that little bit of a bounce on Friday?
Yeah, with going into, we had record net longs for the last few weeks, starting to reduce some of those long contracts, but overall traders as well as the funds are still net long, waiting for that seasonal demand to show up.
The Vietnamese problem with African swine fever doesn't seem to be affecting the hog market too much today.
Yeah, that's odd. There was also reports in Hong Kong that the African swine fever is still spreading there. And it's clearly not controlled, and it's clearly spreading. So that's just going to add more fuel to the fire that we already know that China has to have that import campaign. It's just a matter of when that's going to start. If we get any positive news with the tariffs being lowered from that 62%, a little bit off, you know, you're going to see that big import campaign coming from China, and then you're going to see a bump up in the hog prices.
We'll have to see if that comes to fruition and how much of a bump that could be. Scott, thank you very much. I hope you have a great Monday. Scott Gecas, Walsh Trading, there at the edge of the trading floor in Chicago.
All right.